Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, October 22nd. Well, quiet mixed trade here overnight in the agricultural space. Not much of a range here. Wheat and soybean meal prices find themselves a little bit lower. Bean oil is 50 to 60 points higher, while both corn and soybean prices are very little changed. U.S. harvest is really beginning to hit its home stretch now. That while South American plantings are starting to accelerate as rains have finally started to provide relief across northern and central growing regions of Brazil after months of dryness. All this while fresh demand from China, at least for U.S. corn and soybeans, has been minimal with the uncertainty of the U.S. election 2 weeks from today. Speculative traders yesterday were net buyers across the agricultural space, cutting into their short corn, wheat, and soybean positions while extending length in the soybean products. Open interest continues to build in corn, up another 21,000 contracts yesterday, while soybean open interest dropped 10,000 contracts, that being weighed down now by the liquidation of the November contract ahead of first notice date next week. Warm and dry conditions across the central Midwest has enabled harvest to roll on quickly. Corn has reached 65% harvested. That's its fastest pace now in 12 years. Soybean harvest at 81%. That's the quickest in 7 years. Harvest is above its average in every single reporting state here for both crops. Winter wheat planting progress has reached 73%, a touch below expectations and year ago and the 5-year average. Much of the nation's midsection is expected to remain in a much above normal temperature pattern through the end of the month, with only minimal rains across north central Midwest the latter part of this week. Seasonal moisture will continue for much of north central Brazil and key growing areas of Argentina through the end of the month, beneficial for seedings and early crop development. Demand of corn outside of China remains strong, however, with U.S. competitively priced in the global marketplace. D's corn did reject trade under the $4 level last week, however, not really able to get much traction to the upside right now with this year's record yielding crop. Key moving average resistance rests just above the market at 418.5. Nove beans they're trying to build support right around this 970 level above the contract lows, which sit at 955. South American weather and the pace to U.S. exports will drive price discovery here for the next several months. Spreads have recovered and continue to recover nicely off their recent lows, pretty much having to do the heavy lifting here to keep the demand pipeline full. Otherwise, U.S. farmers really are less than eager to sell crops at prices here just above 4-year lows. Bean oil has firmed up here overnight, likely due to strong domestic demand, as recent crush numbers has showed oil stocks at multi-month lows. We do have key biofuel production data out next week. Disappointing trade action in the wheat, particularly for bulls. Prices down 3 to 5 cents here overnight. Prices continue to be driven by Russian wheat prices and whether they'll establish a $250 floor price for their wheat exports in international tenders. Bulgaria, they were the lowest offer here in Tunisia's recent 125,000 metric ton tender at just under $263 a metric ton on a CNF basis. So generally, a little bit of a softer tone here in the overnight trade. We'll see if we get any more export announcements. Thanks for listening, everyone. I hope you have a wonderful day.